A very warm welcome to you. Many thanks for finding time to be with us on this week's edition of the program. We remain your source for all the latest happening in the world of business. I am Susan Obiako and you are warmly welcome. On the lineup this week, we join Faith and her guest, Mr. Shuaibu Idris, Managing Consultant / Chief Executive of Timeline Consult Limited, on the CEO Rendezvous, where they discuss the topic NIIRA and the prospect of growth for the Nigerian insurance industry. While the Nigerian Insurance Reform Act NIIRA 2025 has been hailed by many, effective implementation remains to be seen. It was an incisive discussion. Let's take a listen.
The industry regulator, the police, the other regulatory agencies need to do even more. So it's a situation where everybody needs to do what? Needs to wake up and give his or her own contribution. The insurance companies that will eventually emerge will be stronger and they will be even more capable and ready to take on additional risk. And then, like I did say, they will have the capacity to engage in enlightenment campaign. And then there will be a bit of changes as regards how often the speed, the accuracy, the empathy the insurance companies will be showing when there is a claim.
On this edition also, the Nigerian insurance industry is undergoing significant mandatory recapitalization exercise driven by the new Nigerian Insurance Industry Reform Act NIIRA 2025. Continental Reinsurance PLC recently put together a CEO roundtable where serious conversation about the future of the insurance industry was discussed. Let's check out sound bites.
We need risk analysts who are looking at risk beyond just a response, but in terms of using AI to predict where the likely risks or challenges are coming from. We also need to prioritize corporate finance because now you're talking big investment. If you look at the returns or even the quality of products and services you have in insurance, that is now I speak as a consumer, there's a lot more security coming from what I see insurance companies are providing.
Data is a fuel that will enable you rightly price risk and indeed rightly place the risk even within your insurance treaty. So in the market today, we are challenged with data sharing, brokers and underwriters, or even between the lead underwriter and co-insurers. Several policies we write today in the country and there are no survey reports, or survey reports exist but are not shared with everyone along the value chain.
What more can I say than to urge you to sit back, relax and enjoy the lineup. Details shortly. Please stay with us.
A very warm welcome to you. It's a pleasure to have you join us on the CEO Rendezvous this week. I have the honor and privilege to be hosting a very versatile person, I must say. Alhaji, some address him as Mr., some address him as Doctor, some address him as Professor. So I'm going to stay with Alhaji on the set today. Maybe at the end of the session, we'll probably dash him one professorship. I'm talking about none other than Alhaji Shuaibu Idris, Managing Consultant and Chief Executive of Timeline Consult Limited. Together we'll be looking at the Nigerian Insurance Industry Reform Act 2025, NIIRA, and the prospect for growth for the Nigerian insurance industry. Thank you, Elijah, for graciously agreeing to meet with us on the program.
Thank you, madam, and good day, viewers. Thank you for having me.
All right. Okay, so let's dive right into it. The Nigerian Insurance Industry Reform Act 2025 has been hailed as the best thing that had happened to the industry in recent times. Do you also share that sentiment?
Honestly, I do share that sentiment, basically because I have been part and parcel of the processes that eventually saw the act being passed by the National Assembly and indeed been accented to by Mr. President, His Excellency Bola Ahmed Tinubu, popularly called as Shuaibu. You see, there are acts and there are acts. There are laws that have, passed through the rigors, the processes of passing such act into, to be operated upon either by the general public or targeted industries such as the Insurance Act. Some of the laws that were passed never had the opportunities that the Nigerian Insurance Reform Act had. What do I mean? The regulator, the industry regulator, that is the National Insurance Commission, champion, the processes of enacting that act. And from the previous commissioner of insurance to the current commissioner for insurance, they were not just industry practitioners on a superficial level. No, they have been hands-on managers. So they know the intricacies of the industry, they know the challenges of the industry, they have idea of the prospect and the vision of the industry, and they are intertwined, they are connected with the industry practitioners, be them brokers, agents, or the main insurance businesses, whether the general insurance, the composite insurance, or the life insurance. And in the process of, enacting that act, all shades of opinions were brought under one roof. Not just once, not twice, not 3 times. You pick brains of this, you pick brain of that. The industry doyen, if you like, the dynamic younger generations, the matured, older generations, the middle level. So everybody had an opportunity to do what? To give an input. And that is why, believe you me sincerely, from the beginning of this democracy, some 20, 30 years ago till today, I'm yet to see a bill that passed through the 2 assemblies at the center, the National Assembly, that is a House of Representatives, and the Senate, up to the presidential assent, that has had the level of input and the level of interrogation, the level of contribution by all and sundry. And indeed, we do believe that if we have the wherewithal, the wisdom, the tenacity, the courage to implement the relevant provisions of the Act, the Nigerian insurance spectrum will be a different ballgame. We are likely going to see a situation where Nigeria will be surpassing, the likes of Kenya, South Africa, Morocco, and other African countries that today are better in terms of insurance penetration than Nigeria.
Okay, Alaji, a good thing that you mentioned, implementation. Now, the main focus of implementation of NIIRA as we speak is the recapitalization exercise, how be it risk-based. that is expected from all players. Will this alone transform insurance operations?
Certainly no. You mentioned fundamentally two things in your comment. Number one, the recapitalization, and then the risk-based, supervisory regime that is coming into, into farm level in the industry. Certainly, the capital adequacy of each business determines the strength of the business, the capacity of the business to take on challenges, and the abilities of the business to handle, larger scales of business. As you probably will know, madam, insurance is one industry that has a bit of layers. Apart from the brokers that run around to raise the business, they have the actual undertakers, the actual companies that offer the cover for the risk in exchange for premiums we collect from customers. Then you have the reinsurance business. Now, if you have a general insurance company, and the general insurance company is a leper, meaning does not have capital, how much can that company shoulder in terms of risk? So the idea of capital increase, that is the paid-up capital increase as proposed in NIIRA, is excellent idea, because there will be a kind of stratification. General insurance would say 10 billion or 20 billion capital, this is how much you will be able to shoulder. Some who has up to 50 billion, this is how much you will be able to shoulder. And we used to have composite insurance companies that were taking both on general insurance and life. Now the system has stated that you can do general on one side, and then you can incorporate another company and do a life assurance. And even in general, there are certain classes of risk that if you are not, strong enough, you may not be allowed to shoulder such risks, like oil and gas or aviation sectors. Those are sectors that are a bit, gigantic and huge in terms of exposure. One risk crystallization, if it is not, can wipe out the company, and we don't want to see companies dying. So I think it's a good development that, the Act, specify a slightly higher, capital requirement than what we currently have, and what we are likely going to see, in the period towards meeting the capital adequacy requirement is a bit of merger, bit of acquisition. I don't foresee any company being allowed to die or to be liquidated. Chances are, industry players will align and realign, just like what happened in the recapitalization exercises that was done during Professor Saludo's tenure as governor of Central Bank, and the banks were able to come together and merge. If you remember, quite a number of banks, 2-3, put years together and merge, and they were able to
okay, Alex, good thing you made that comparison with the banking sector. Okay, so the banking sector, after the last round of recapitalization, saw mergers and acquisition, and it actually marked a new beginning in the current banking sector that we see. But insurance sector has also gone through their rounds of recapitalization in 2007, and from 106 insurance companies, we now currently have about 47 then microinsurance and Tekafu. But we haven't seen much of that vibe or expectation that we expect. You mentioned South Africa, you mentioned Kenya, And if you go by what we read about those clients in terms of insurance uptake, we haven't seen much of that in the Nigerian insurance space. So will this risk-based capital, will it usher in something different from what we have seen before?
Honestly, madam, I tell you, number one, we are coming from an ecosystem, an environment where Nigerians aren't so aware of insurance. They are not so much, faithful, with insurance, because, okay, I've had a third-party car insurance and I had an accident and the insurance company is not coming to my aid. So there is lethargy, there is apathy, and there is trust deficit from Nigerians on the insurance, businesses, as the case may be. And to worsen the situation, we are in a climate where regulators, not just the industry regulators, when I say regulators, I mean the police, for example, enforcing the very minimal, insurance policy on cars is not there. So yes, there is now a new act that provides, for example, this office where we're expected to have an insurance for the building. We're expected to have insurance for each and every office. The kind of equipment I have here, we need to value them and then get insurance cover.
All right, welcome back from that incisive season with Mr. Shuaibu Idris on the CEO Rendezvous. Let's now bring you highlights from the CEO Roundtable organized by Continental under the theme Recapitalization and Beyond, Rethinking Risk, Capacity and Collaboration for a Resilient Insurance Sector.
The financial services sector is currently going through recapitalization. For the insurance sector, their recapitalization is driven by the Nigerian Insurance Industry Reform Act 2025 NIIRA, which mandates significantly higher minimum capital requirement MCR to strengthen the industry and enhance capacity. Continental Reinsurance PLC, a pan-African company, recently put together a CEO roundtable for insurance operators to discuss recapitalization and beyond, rethinking risk, capacity and collaboration for a resilient insurance sector at their corporate headquarters here in Lagos. In his welcome remarks, the host, the Managing Director and Chief Executive Officer of Continental Reinsurance PLC, Dr. Fatai K. Lawal, stated, "It is not capital alone that makes organizations to succeed."
For us at Continental, as a top leadership organization, we decided to bring the leaders of the industry together to let us think about this process. What is happening? Where are we? What can we do to get us there? It is also an opportunity to share experiences from members who have done this in the past and find out how they made it to that level. But more importantly, we brought an economist and finance expert to delve into this subject with us, to look at beyond capital, what next. So it's not just capital alone that run organizations. There are so many things that are needed for organizations to achieve success. And I'm sure by the time we leave here today, we will have gained one insight or the other. We also have built a network that we can use to actualize this purpose.
In his goodwill message, the Deputy Commissioner for Insurance, Dr. Usman Jankara, also noted that as the industry undergoes the current recapitalization, operators must remember that capacity is beyond raising capital.
Capacity building must therefore extend beyond financial capital to human capital, that is, technical skills, leadership, actuarial and innovation mindset. Capacity must also extend to technological capacity such as catastrophic risk modeling, insurtech adoption, data analytics, and digital distribution. As the African Insurance Organization noted recently, the future of African insurance will be digital, data-driven, and customer-centric.
Many have questioned why is recapitalization necessary for the insurance industry at this time. The answer is 1. Capital adequacy will increase the solvency and ability of insurance to pay claims, particularly for large or complex risks. Second, it will help Nigerian insurers better withstand FX volatility and economic fluctuations. In his submission, the lead paper presenter, Mr. Bismarck Rewan, Managing Director of Financial Derivatives Company Limited, gave an overview of the Nigerian and global economy and reiterated that Nigerian insurers must look beyond recapitalization exercise.
The Nigerian budget will be announced in December. And I've talked about this. The growth will be about 4.2. NIIRA remains stable at 1450 to 1500. Headline inflation will increase in December on base effects. Stock market capitalization will increase somehow. Rapid population increase, use of technology platforms to make AI displacement effect. Private consumption contribution to real GDP will improve to 2.08%, creating a more supportive environment for insurance. Insurance is a lagging indicator in the sense that after things have happened, then you insure and follow through, and it's a savings product. Interest rates are a function of savings. No, savings are a function of interest rates. And so recapitalization helps, but it's not everything. I think what is more important is the skill, the governance, the transparency, and the management of these companies.
The high points of the CEO Roundtable was a panel session aptly tagged Recapitalization as a Catalyst, Positioning for Scale, Partnership, and Performance. Chairman of session was Sir Dr. Ogala Osoka, MFR. Panelists were Mrs. Omolola Eson, Partner and Workforce Advisory Leader, Ernst & Young West Africa. Mr. Wole Oshin, GMD Custodian Investments PLC, and Mr. Kunle Ahmed, Chairman, Nigerian Insurers Association. In his submission during the panel session, panelist Mr. Wole Oshin said that the biggest lessons from past recapitalization exercise in the Nigerian insurance industry was that most mergers and acquisitions were rushed.
9 companies coming together. How do you define culture of such an institution moving forward? It's just a recipe for failure at the end of the day, because especially when there's no dominant player. When you have a dominant player, you can even say there's going to be a direction. But when there's no dominant player in the matter, and you are being forced to come together because of time, or because everything is running very fast, it's just a recipe for disaster. And because the number of companies at the time did not make up their minds on time, they lost out in the process. And some of them even just, sort of like lost their licenses. So legal aspects, financial aspects, these are all things that definitely one has to look into, moving forward. And these were the experiences that we saw at the time, because it was just a rush effort.
The CEO Roundtable couldn't have come at a better time, as the conversations were very impactful for participants. We spoke to the organizers on the rationale behind the event.
We know for sure that there's going to be a lot of mergers and acquisitions. There are going to be a lot of companies that might not make it through this round of recapitalization. But what we were hoping from our side, from where we sit, is for a stronger reinsurance and insurance industry. We're looking for areas where people, after having gone through this round of capital raising, will start to show proper appreciation of the capital, shareholders' funds, and start to vet and view risks separately. That's my hope, that's my dream. By the time you think of how much your shareholders have put into raising capital and ensuring that they meet the minimum capital requirements, underwriting will now come up to the core of the business. That's where we as reinsurers will now find value in the post-event of recapitalization.
For us at Continental Re, we see ourselves as a thought leader as far as the insurance industry in Nigeria is concerned. after 40 years of operation, we believe we should be able to make a contribution to the life of our clients. The issue of capitalization is a major one, and we feel this should provide a platform for them to share experience, for them to ask questions, for them to be able to propel the process for achieving this new capitalization. But more importantly, we're concerned that building a viable organization goes beyond capitalization, and that's why we started talking about beyond capitalization. What should be the thinking around risk, around capacity, around collaboration to build a resilient insurance sector.
All right, that's the time of the program this week. Many thanks for being a part of it. Join us same time, same station next week for a fresh package. In the meantime, feel free to connect with us on all our social media platforms. Subscribe to our YouTube channel, Amon Finance TV. You have tons of videos to watch that are entertaining and educative. I am Susan Obiako. Until next time, from all of us here, it's a goodbye.